The German economy has really substance, but we have a lack of competitiveness. In 2014, Germany was ranked sixth in the global competitiveness index, and then there has been a decline, and now we are 22nd. And this is why we have to introduce supply-side structural reforms, labor market, less red tape, reinventing our energy system, and a reform of the corporate taxation.
Is the debt brake in Germany getting in the way of investing for the future, preventing you from achieving economic security?
No, it is not. We are investing almost on an all-time high. There is no lack of public sector funding for the infrastructure, for example. The IMF experts, they look at a multi-annual average, and they have not yet acknowledged that over the last couple of years the amount of public sector investment is much higher. But the debt brake of our constitution maintains sound public finances. Given the situation in the USA, we see that deficits in the budget to pay subsidies to private enterprises can lead to higher inflation rates. And we make progress fighting inflation. And this is not only due to the monetary policy of the ECB, but is a result of our moderate restrictive fiscal policy.
I want to probe further on the Inflation Reduction Act then, because Mario Draghi has said that Europe is being caught out by China and the United States, that they're not playing by the rules and actively devising policies to enhance their own competitive position. Is German industry being wounded by American and Chinese policies?
There are, of course, effects, side effects of the Inflation Reduction Act, but we should not overestimate it. I doubt that the US will be able to follow this fiscal policy for a very long time. I think it's not sustainable given the deficits, the taxpayers' money which is needed to service the debt, and the higher inflation rate. Coming back to the European Union, we have not a lack of money. We have subsidies in, I think, almost the same amount than the US, given the different sizes of our economies, but we are less agile. And we have problems on the supply side of our economies, and we have a lack of a capital markets union. I suggest the European Union to focus on that, being more agile, deepening the single market, especially for capital services.
Can we just identify, though, what you're up against? Do you think the Americans are breaking global rules by engaging in trade policies at the border combined with the Inflation Reduction Act?
No, I do not think so, but it is protectionism, and we should remind ourselves of our common values. It is in the best interest of the US and the European Union to cooperate closely and to intensify our bilateral trade. And we should reconsider transatlantic trade agreements. Our rival, competitor, is called China. And so we shouldn't introduce policies which harm ourselves, US and EU, but we should work for a level playing field with the competitor China, and there's much more to do than in the bilateral relationship between the US and the EU.
How worried are you by what Janet Yellen called overinvestment in China and the consequences for EVs in Germany? Could it upend German industry?
No. The German cars are the best in the world. Doesn't matter if internal combustion engine or electrified vehicles. They are the best cars in the world. The German car manufacturers are world leading. They do not have to fear Chinese competition.
But they do have to fear margin pressure, and that is one of the implications if we see overinvestment. Could that undermine the profitability of German EVs?
I don't think so. I think the quality of the German cars is a class of its own, and it's a customer choice. But we have to examine whether the Chinese follow a dumping agenda, and if they pay subsidies to sell, for example, cars cheaper than they had been produced. This would be unfair, and then we would have to decide about measures. But at the moment, in all of the sectors which we are looking into, is not yet this dumping situation.
What measures could you embark upon, though? Would it be WTO? Would it be trade barriers at European borders? What are we talking about?
It's not something I ask for today, but all options are on the table. But at the moment, from all what I'm hearing from European Commission and others, they are closely observing the situation, but there is not yet a situation in which we have to make decisions. For example, when it comes to solar components, the Chinese are very cheap. The German market is flat by Chinese components, but they are very cheap. The private households in Germany, they benefit from these cheap components, and our advantage, our competitive advantage, is the system as a whole. There's intelligence, there's cutting edge technology, this intellectual property we have to defend, but we have not the idea of producing all chains of the value chains ourselves.
How do you defend older industries in Europe and in Germany in particular? The Americans are looking at ramping up tariffs on steel and aluminium product coming in from China. We've seen this playbook before. We know that some of the product can end up elsewhere, and there's fallout for European producers of steel and aluminium. What can you do in that context?
Well, this is really not my agenda. Building new barriers and following a protectionist agenda, it's not my agenda. We have to strengthen our competitiveness. We have to secure that our products are the best in the world, that they are competitiveness. German cars are sold not by price, but by quality and technology advantages. And so I understand our car manufacturers. They are exporting in the world, including the Chinese market. We would harm ourselves if we reduce the bilateral trade, even with China, because it's a target market. And I want to be our framework conditions in Germany as a whole to be improved, because we benefit from open markets. And so we have not a defensive agenda, but an agenda with some very demanding targets.
Let's talk about going on the offensive then, because Enrico Letta has also released a report on competitiveness. He calls for a single market with more teeth. One idea he's proposed has been around the use of a state aid mechanism, effectively governments contributing national funding for pan-European initiatives. Is that something you would support?
Let's focus on the aspects of the Letta report we can agree on very soon. And this is making progress with Capital Markets Union. I think we have to introduce structural reforms. Yes, our single market can be deepened, but giving the European Commission more taxpayers' money or neutralized debt to pay subsidies, I do not think this is the right way. I doubt this is sustainable, and I doubt that this policy approach brings the best results for our economic structure. Well, businesses should be successful in Europe to fund the state. It's not the other way around, that the state has to fund, to subsidize businesses. This wouldn't be sustainable.
CMU, something you've just flagged.
Yeah.
How How much support do you have for CMU? Are there any hurdles, any obstacles you still see at this stage?
No, we are completely committed to making progress there very soon. We have a roadmap. The Eurogroup has agreed on the next steps, and now we have to come to action. The direction is very clear, and the leaders in the Council they have emphasized this common agenda, and so let's work on it to make progress just after the European election.
So how soon could CMU be up and running? What time frame are we talking about?
Very fast. I think we can see progress within the next 18 months.
I want to ask you about CMU and banking union, because one consequence here is that it removes barriers for consolidation cross-border. Consolidation in European banks has been very difficult to achieve. Would you like to see a bigger bank in Germany? Would you support the consolidation of Deutsche Bank and Commerzbank?
Well, these are decisions to be made by the shareholders and the management. It's not up to us as German government.
But would you stand in the way if they decided that was the right
No,
move?
we are not standing in the way, but it's a private decision. It's not our decision. It's not a question of industry policy to suggest such steps. From my point of view, yes, of course, there is an opportunity to have a consolidation in the European banking market, but should be bottom up out of the markets, not top down. Let me just add one important detail. We are fully committed to banking union, but one obstacle is the sovereign bank nexus. There are many private sector banks across Europe which are holding sovereign assets. And so we have to reduce this nexus before we can make next steps when it comes to depositor insurance schemes, for example. So step-by-step approach I advise here.
German inflation, it slowed to 2.3% in March, lower food and energy prices coming into the mix. How much of the inflation battle has been won, and how much of it is down to the efforts of the government?
Yeah, the battle is not yet won, but we have made remarkable progress. It is a result of the monetary policy of the ECB, but in Germany we do not counteract the monetary policy. We follow the advice of international institutions like the IMF, and we are following a moderate, restrictive fiscal stance. And we are mobilizing capital to reduce the supply side shortages. And so I think we have found a very good balance between fighting inflation and working on improved growth perspective for our economy over the next years. You are probably aware of the fact that our potential growth is only 0.5, and we are preparing a new agenda which aims to double the potential growth as first step in the next couple of years, maybe 2 years.
Just finally, can I wrap up on the geopolitics? Events over the weekend, direct attacks by Iran on Israel. We're still waiting to see how funding can be approved in the United States for Ukraine. How concerned are you still about the risk of geopolitical threats from here?
We have lost so much money over the last years to mitigate the effects of the geopolitical crises, and especially the terrible war of aggression of Russia against Ukraine. And so, well, we have so many tasks, fighting climate change, fighting poverty, improving the productivity to see more growth globally. And here in Washington and elsewhere, we have to deal with this terrible geopolitical tension and war. And so we condemn this aggression, and we should work for peace, because this is the best fundament for our economic well-being.
And on the Middle East, are you concerned about an escalation?
Yes, of course. There is a risk of escalation. with effects on the global economy. And so we are standing side by side with Israel. Israel has our full solidarity, and we condemn the Iranian attack, but we urge all not to escalate the situation.